You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors.
All right, everybody. That music means once again, it is time. It is Education Wednesday. That means it's time once again for the premier options educational program. It is time for Options Bootcamp. My name, of course, Mark Longo from theoptionsinsider.com, as well as, of course, from the ever fascinating, at least we tend to think so, Options Insider Radio Network. Reminding all of you folks out there, listeners, if you like what you hear, do keep rating and reviewing wherever you get the program, your Apple Podcast, your Spotify's, your Google Podcast, your YouTube, wherever you get it, Audible, your smart speaker. If your platform allows you to leave a rating, we do appreciate it. It really does help, clearly, new folks continue to discover the show. Of course, if you want to go above and beyond and you want to get more content in your lives, you're saying, I really would like the opportunity to pick the brains of the best minds in the world of options derivatives, outside, of course, of the opportunity to do that on this show. You want to go above and beyond with our pro Q&A sessions, as well as options oddities, as well as live access to this, everything else that we do. If you're one of our pro folks, you're listening to this show right now. No waiting for a week for you out there. So you pro folks get all the goodies, as well as, of course, awesome giveaways. We got the Pro Trading Crate. If you're active at all in the pro for the month of January, you are automatically entered to win the Pro Trading Crate, and they are pretty freaking cool, if I do say so myself. No small amount of effort and expense goes into putting these things together for you listeners, but you are worth it. Where do you go to learn all about that goodness? Theoptionsinsider.com/pro is the place to go. And let's see who is joining us today. He's keeping his 10-plus year streak alive. We are joined once again on Options Bootcamp today by the black-hatted one himself, Mr. Dan Passarelli from Market Taker Mentoring, what the cool kids call to Mr. P, welcome back to the show, sir.
Well, who else do you think would be joining you here today, Mark? I am glad to be back on the show. This is something that I look forward to every darn week. And boy, oh boy, we've got great things to talk about again today. I can't believe it.
Lots of good stuff. Before we do that, let's kick it off here with our reviewer this week. We got a 5-star review coming in from Charlie. Just Charlie. He keeps it simple. He says he's loving this show. Well, thank you, Charlie. We're loving your review, and everyone else takes the time out there to rate and review on your platform of choice. You folks are the real heroes as we keep on rolling right on into a little bit of the old mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, everybody, welcome to the mail call, the portion of the show where you folks take the reins, your questions, your comments, your insights, your pearls of wisdom. I know you're all just waiting on the edge of your seat with bated breath for the moment everyone looks forward to every week. It's the Dan Passarelli question of the week. But before we get there, I'm going to leave you a little bit of a tease. I'm going to make him hang for a little bit because instead we're going to pay off first our question of the week from last week, because it was that time, listeners. It was that time of year, January. That's usually where we try to gauge your sentiment for the year, and we do so in the form of a poll. And this year we asked you kind of the same question we ask every year around this time. Let's kick off the new year with our annual January sentiment poll. If you had to buy a 10% out of the money call expiring December 31st on one of the following products, which one would you choose? We gave you 4 choices. They were products/market segments, really. And they broke down as SPY SPX, so your broad equity segment, effectively. And then we had Bitcoin, so your crypto segment out there. A WTI, representing our commodity friends out there. And then VIX, so volatility itself. Mr. P, sir, what do you think our audience voted for?
Oh, geez. Yeah. I mean, we talked about this last week. I mean, I don't think they should vote for any of them, but probably the S&P 500. That's probably your best bet.
You're damning it with faint praise, sir, but that is what they chose. 43.3% choosing the SPX. 24.4% each, so a weirdly precise tie between WTI and VIX. So a battle between crude and VIX, and then only 7.8% for Bitcoin. If you're wondering, how does that compare to the beginning of 2021, listeners, where we asked the exact same question? And back then, the SPX took 33.9%. So you folks are decidedly more bullish, at least percentage-wise right now. We had 26.8% for number 2 for WTI. VIX right behind it, 25%. So again, almost a tie between VIX and WTI, which is kind of weird. So many people are undecided between those two products. And then bringing up the rear again, but by a double the percent of this year, was Bitcoin at 14.3% last year, only 7.8% this year. So no love out there for the crypto. Speaking of love, we got Frank in the live chat. Frank1209 says, a second boot camp. Awesome. Yes. If you are in the pro, you are listening to the second episode right now. No waiting for you folks. So glad you folks are having fun. And Dan, I can delay it no longer. The folks are waiting with bated breath. What is the MTM question of the week, sir?
Mark, I'm gonna kind of paraphrase a category of questions here, and a lot of times I will talk to some traders, because we do a lot of one-on-one coaching here, right? So I get to literally talk one-on-one about traders, about what's going right, what's going wrong, and a lot of times I'll talk to traders and good traders. I mean, some folks are just starting out, and everybody learns at a different pace. I'm talking about the folks who have some experience under their belts, and I know by talking to them that they know what they're doing. And they'll say, man, I just got killed this month, I'm down money this month. And, Dan, what am I doing wrong? And that's one of the nice things in one-on-one coaching, is because I can say, okay, here, pull up your account, show me some of your trades. And, sometimes I'm talking about one specific group of folks. Sometimes I'll look at their accounts and I'll look at some of the trades they made, and I'll be like, you know what? I can't find anything wrong here. Like the things you're doing right. This is how you're supposed to trade. You're not really making any blatant mistakes. And some of that ends up coming down to, just what some people would call bad luck, right? And there's nothing wrong with that. I would call it bad luck too. Even though luck is, does it exist or doesn't? Bad luck, and it's just a drawdown period. Like, trading is a statistical nature, and as long as you're putting on trades that have a positive expected return, there's going to be some times where you just, you get a string that just didn't work out, but that doesn't matter. That doesn't mean necessarily you have to change your strategy. Maybe you should, and you should definitely take a look at it. But if you know you're doing everything right and it's worked in the past, it's just one of those things, and you just got to weather that storm.
Dan, we were talking about the zero DTE on our last episode last week. And so, as we mentioned, might be a good question of the week. So I think I am going to put that out to the audience. What do you think this week? That's going to be our question of the week, Dan. Is zero DTE a fad, or is it here to stay? What do you think? Think that's a good question of the week?
Ooh, Mark, I think that is a good question of the week, man. Yeah.
I think SIBO is going to see it, and they're going to have all their employees get in there and start voting it.
Yeah.
It's real. It's real. It's real. Okay, here we go. All right, bam. There we go. It is live. At Options is the place to go to make your voice heard. Maybe we'll check in at the end of the episode, Dan. What do you think people are going to vote for?
As far as, is it a fad or is it not a fad?
Yeah.
That?
Yes.
I bet we're going to be 60-40 split, and I'm betting that the 60 is going to be it's here to stay, and about a good 40 is that it's a fad.
Okay, we shall see. The people will speak, Dan, and then we will know the truth. Again, if you're not following us at Options, we put out a lot of fun stuff like this throughout the week. That's the place to go for all that goodness out there. You can also send questions in, like a lot of people do over there. Just like Anthony Jackson did. Anthony Jackson says, I've heard a few comments on the network about how hard it was to make money owning puts last year. How is that possible when SPY was down 20%, the Qs were down 30%, and Tesla down 66%? Seems like a good year to own puts. You know, you're not far off there, Anthony Jackson. If you just look at the graphs for last year, for a lot of the names you mentioned, then you think, just a banger year to own puts across the board. I will probably remove the single names out from there because that's a little bit of a different conversation. When we're talking about how it was a hard year to make money owning puts, we're mostly talking about it on the broad indices because that's where we're talking about skew and all kinds of other things like that. A name like Tesla, you can get a 10% move in a day and you can have puts pay off out there. So I don't think that same conversation applies to Tesla. Maybe Dan will have some thoughts on Tesla, but in general, when we're talking about it being a challenging year to own puts, it was in SPY and in your Qs. And again, you might be surprised by that. You look at the net numbers on the year and you'd say, bam, that's a banger. Have the puts in your back pocket. You're good. Live to fight another day, make a bunch of money. Everyone's happy. And yet, as you saw the moves play out last year, there were kind of shocking sell-offs early on in Q1. And that's the period where I think you probably had the best chance to make some money with outright puts in the S&P or the Qs or pick your index of choice out there. As the year progressed, we saw a lot more intraday sell-offs and swings, and we just talked about it in our pro Q&A session last week here on the network with Scott Nations about the challenges that were presented there, because last year was a year where kind of skew went to die for the second half of the year as well. So if you had puts in your back pocket, you didn't really get the pop that you needed out there. Even on days when the S&P selling off 2.5%, you didn't see those puts really start to pay off. So it was very challenging. Also, if you bought them earlier in the year when they were kind of pricey, then it was hard to make those puts pay off in any environment because you overpaid to begin with, which is why when we're on this show and we're talking about hedging, we usually say, hey, do a put spread or sell something else against it because that's going to mitigate your outlay off the bat. If you're just buying 5 or 10% out of the money puts in the S&P, that's usually a road to ruin without doing something else. You're going to shed anywhere between 8 to 10% on a decent year, and probably more than that last year, just for the hedge. So that's a difficult thing to overcome. Add that in on top of what you're losing on the index. That makes it a rough year. Doing something else, selling a put spread against it, selling a put, I should say, against the put you're buying. So buying a put spread, maybe legging into a collar, lots of things you could do to mitigate that outlay. That is certainly the first step to making it a little bit more bearable for buying those puts out there. But still, again, it was a very challenging year. Dan, do you echo this sentiment from Anthony Jackson? Do you agree that it was a rough year? Maybe Tesla aside, unless you want to speak to Tesla directly, then I suppose we can. But I'm talking more about the indexes here. How is it possible, he wants to know, that it was a hard year to make money owning puts when the S&P was down 20% and the Qs were down 30%?
Well, I mean, every trader has a story, right? What was that phrase about New York that they used to say, like there's 1,000 stories in the naked city, or 1,000,000 or whatever the heck it was. Like every trader has a story, and if there were a few comments, I mean, those are isolated stories. One thing I will say in general is that most traders have a hobby. And what that hobby is buying puts at the bottom. Like if I had a nickel for every time somebody told me about how they lost money buying puts, I would, look at it and say, okay, where'd you buy puts? Show me on the graph. And it's like the absolute bottom, the capitulation point where everybody panics and pukes and buys puts. And, so, I mean, maybe someone was relating that story, hopefully, if it was a personality on the network, or because timing is everything. Timing is everything when it comes to trading, both on getting in and especially on getting out. But people love buying puts at the bottom.
They do indeed. Let's just do a quick check-in here while we're talking on how our poll is playing out so far in the early going here, Mr. Dan. We've got, it's a tie. You were right. 50% each for It's a Fad and It's Here to Stay in the early voting. But again, it just went live, listener, so we'll come back to this one. Kind of a fun one out here. But yes, it was a challenging year out here, Anthony. We went into a little bit more detail on exactly how and why that is on our Pro Q&A. I encourage you to check that out. We've also talked about this at length on shows like Volatility Views and the Option Block out there. But in general, outside of that kind of one period there in Q1 of last year, it was very challenging. Look at the graphs, look at the charts. It was very challenging to make money with puts. And as Dan mentioned, people do tend to load up on puts at the, shall we say, least opportune moments. That's also a complicating factor as well. If you bought all your puts when the S&P was threatening 3,600, it's challenging to make money in that environment regardless. Let's go around here. The flip side of that is a lot of people woke up to the value of maybe selling some puts last year and getting some value out of those. So if you're one of those people, be curious to hear from you folks out there. If last year maybe convinced you that using some puts to get in at whatever it is, an index, a single name at a lower level is a way you've started to use to start nibbling at some of these names that have been beaten up. I'm curious. Hit us up. Let us know. Let's go around to this question here from Tharounds, maybe Tharounds. Tharounds. Okay. Well, Tharounds says, do you think last year would have been a down volume year without the explosion of 0 days to expiration SPX options? It certainly helped. We talked about the numbers last week. Let me see if I can go pull up that report again. Now, SIBO, again, they don't give specific numbers, which is why it makes it a little bit more challenging. They say ADV for SPX options with 0 days to expiry increased 83% throughout 2022 and comprised 43% of overall SPX volume. Now, and that was in December. Now, SPX is averaging 2.2 million contracts a day, somewhere in that ballpark. So you're closing in on half of that. So you're talking close to 1 million contracts a day in this zero DTE phenomenon. Now, then again, remember, these only really came online through the second half of last year. So it wasn't there through the entirety of last year. So even if they were doing 1 million extra contracts a day for, let's say, 6 months, and then, of course, you're only talking about a little over 100 million extra contracts out there. Still, that's a lot. Nothing to sneeze at. And it certainly helped contribute to the overall options market coming in at a record year of close to 10.5 billion contracts. You're right around 10.4 billion out there. So figure 100, maybe somewhere around 150 million of that was in just the extra zero DT that came online towards the second half of the year. Dan, you down with that, or do you think it was all zero DT that drove us to records this year?
Well, I mean, looking at the volume, I mean, clearly it helped, and what a lot of people don't think about too is that whenever a new sub type of option, I don't really know what to say. It's not a new class. That would be a different stock, but like a new time period or new strikes or different, different underlying, if there's a corporate action or something, whenever things like that happen, it's not just the volume that trades in those, but it's the volume that trades in those and the arbitrageurs that are sort of holding stuff together, like you happen to see that the Wednesday volatility is lower than the Tuesday and Thursday volatility, and there's nothing going on this week. people are going to be trading butterflies and sell the Tuesday and Thursday vol and buy the 2 of the Wednesday vols. And so like it kind of snowballs a little bit, it's like an exponential increase in that subset of volume. So, I mean, it definitely contributed to the volume, but that said too, it was a great year. I mean, conceptually, it was a great year to be someone who has options in their tool belt, because you were able to use them for hedging. You were able to take advantage as a trader of the high volatility. I mean, it was a good year for trading options. That said, traditionally, a lot of people run for the hills when it's a good time to be trading options. Like the market stops going up and volatility gets high. It's perfect for option traders, but a lot of people stop trading then, which is, just more for us. So I don't know. It's hard to say. There's many factors there, but definitely 0DT did play some role.
Yeah, looking here at the release they put out in April, and they announced the new 0DTE contracts. They said in the previous year, 2021, a total of about $250 million, 247 million SPX weeklies traded in total in 2021. So you're talking $250 million contracts in 2021. We don't have the numbers. Like I said, they didn't break out the numbers, which is a little weird for 2022 individual. I have to go dig and see if I could find those. But they do say that the ADV for 0-day SPX options increased 83%. So I don't think we can assume the overall weeklies volume increased 83%. But even if it did, you're talking another 205 million contracts on top of that. So you're talking somewhere in the ballpark of 100 to 200 million contracts. Still a lot. It's a ton. And certainly contributed to getting close to that 10.4 billion out there. But it's not all pointing directly at 0DT. But still, a good question. Who asked that? The rounds. Good question there. The rounds or Thay rounds, whatever you call yourself out there. Let's go. This is the memorable handle. Face tattoo. I love our listeners. They got some interesting handles. Face tattoo says, have you guys thought about selling straight at the money, same day straddles in SPX? I've been paper trading it and it seems to be a winner. Oh, here we go, Dan. Now we're getting fun. 0DTE straddles, selling the hell out of them. Is that your bag, sir? You love that?
It's not my bag, and I generally caution people to not do that. That said, we do have one of our student traders who's one of our smarter folks who had a great deal of success with that. But that's not a set it and forget it trade by any stretch of the imagination. Like that's a high contact trade. You're going to be watching it all day. You got to really know what you're doing. You better have a airtight plan for it. And it's hard to make it work, and it's dangerous, but it can be done. I would try to talk most people out of it, though.
Would you like it better perhaps as an iron fly instead? So you're buying a strangle against it to mitigate your risk, sir?
I love insurance. Yep, I sure would.
I know you like the iron condors. Have you workshopped the iron flies instead? Is there a reason why you're not going with those?
Just because the break evens are a lot tighter with them. I'd rather have that extra room. It does increase the size of your loss when you're wrong, so you still have to manage that. But the strategy that I employ, and there's a fair amount to it, requires me to do iron condors for the extra wiggle room, as I like to call it.
You like yourself a little bit of the old cushion. What's the old saying? An iron condor is an iron butterfly for cowards, Dan, right?
Yeah, exactly.
So there you go, Dan. Clearly a coward. But face tattoo, yeah, this is not my favorite strategy either. If you are going to do it, like Dan said, you have to be on top of this. You got to babysit this. This is not set it and forget it. You have to be working aggressive stops against it, or you put it on as an iron butterfly instead. So in case something extreme happens, you are stopped out there. That's the only way I could really see putting something like this on. But this is, yeah, you're going straight to the fire with this one. You're not messing around. If you said your paper trades are working, well, send it to us. We'll take a look. But again, off the top of my head, looking at this for the first time here, not my preferred way for you to proceed. Let's go out to Randy. Randy L. He says, I'm looking at my DraftKings account and I'm really, in all caps, really wishing for some call options on my Chiefs for this week's game. Is this just a pipe dream, or do you think we'll see some options on these? And what format would it take? Oh, here we go, Dan. We got a Paisan. He says, grazie. There we go. So a fellow Paisan writing in here on the show. Yeah, I'm with you, Randy. I would love to see more options, pun intended, on some of these platforms. I use DraftKings. I like it. But yeah, the options for quote unquote trading these things are very limited. You can trade the spreads. You can trade around. They have all kinds of interesting things. The problem with gambling or wagering in any form is it's kind of a one-size-fits-all bet. You put it on and either it works out or it doesn't. It's very much a binary type trade. Sometimes they offer you the option to cash out early and you could trade it in that sense a little bit and get some of the value for it. But usually you put it on and either it hits or it doesn't. So these are not really trading vehicles in the sense, even like you say, what format would the call options take? First off, I don't think we're going to see this anytime soon. Let me just put this out there. This has been floated. Many firms would love nothing better than to do this, DraftKings included. They know there would be a ton of interest in this stuff. Regulators still not quite there. There's a lot of opportunities for skullduggery in those markets, and so they're a little reticent to let the masses pile into them. If it did happen, they do have futures on those platforms now. So I probably would imagine it would be something along the lines of options on those futures to start. So if you look at, let's say, I don't know, the Chiefs winning the Super Bowl, for example, you have futures on those. You could buy an option on those futures. Again, those are not really trading vehicles. They're kind of buy it and ride it till the end of the season kind of things. Not my favorite way to go, but they're not the most liquid things. And again, you can't really get out of them. Can't cash them out. Sometimes you can, but usually you can't. So I would have to imagine if it did happen, Randy, it would take that format first. Call options on, and maybe puts on the futures, and then it will expand from there. But you're talking down the road because the regulators still haven't come to grips with crypto. So they're nowhere near approving sports options. Dan, what are your thoughts here on calls on the Chiefs, sir?
Well, I mean, I don't think we would ever see a traditional exchange. We're not going to see the SIBO or the CME group doing this. Is it possible for an organization like DraftKings or other? Yes and no. Mostly my answer is no, because it's established, right? Like with any industry, like look at Southwest, right? For those of you who are watching this recently, since we recorded this, and not listen to this 4 years from now, it might be fresh in your mind that Southwest Airlines had to cancel a bunch of flights. It was a big disaster. And why? Because they had this computer system and it worked. And, it worked. If it ain't broke, don't fix it. And so they didn't update it. And it just finally got outdated, right? That's how that industry is. You go to your doctor, like I go to my doctor and they're like, oh yeah, well, we have to send a fax to this place to get your results. I'm like, a fax? Like, don't you have to build a freaking time machine first? What is a fax? I don't even remember what that is. But that's how they always did it. And I think it's the same thing in the, let's just call it gambling industry, right? I could be polite and call it entertainment industry. But, they have a specific way that gamblers are used to betting and that odds makers are used to making odds on, and optionality, like call and puts, that's just a whole completely different system that would require all their customers to think entirely differently and all their people who are employed as odds makers to learn a whole new system. And that's just hard in any industry. Now, that said, this is definitely an age of disruption when it comes to tech companies. And I would say something like DraftKings is a tech company on a lot of levels. So, I mean, it's possible somebody could come up with that idea, but changing the ways customers think is a challenge for anybody. like for any company. Like look at Apple. Like Steve Jobs' whole thing was to make things intuitive for people, make their computer work in such a way that people's brains already worked. And that's why it caught on, and that's why people love their products. So there'd be a lot of challenges to it.
No, it's funny. You say CME and SIBO would never get into this. I probably would have subscribed to that. But then last year, we saw SIBO, I should say, adding 0-day products, which are not binaries, but they play a lot in that same category. And then CME last year listed event contracts, which are effectively binary. So they're both taking small baby steps in those waters, Dan. So I don't know. I will never say never anymore. Post-pandemic, everything is on the table, Dan.
Yeah, hey, absolutely. I'm with you on that. I sure never say never about anything.
These are all for-profit public companies at the end of the day. They see money. They're going to go after it. But that's all a long way around to saying we are still a long way from that. Who was that? Randy L. It would be cool. It would be interesting. It would open the floodgates to options to even more people than we see now. But it also is ripe with all sorts of challenges that we have to overcome first. And we are a long way from doing that. Unfortunately, listeners, that music means we've come to the end of our epic journey through the world of options today. Great questions, everyone. Keep them coming. You can hit us up over there at Options is the place to do it. Questions at theoptionsinsider.com also works. Let's check back in with our poll before we go, Dan. It's now 57.1% saying they are here to stay and 42.9% saying it's a fad.
Damn, man, I'm
DTE.
pretty darn close, huh?
You're in it right now. We got a week to go, so we shall see, at least a few days to go. So it is our question of the week, listeners. So get over there at Options and make your voice heard. Mr. Dan, if folks want to reach out to you in between our episodes, where should they go? What should they do?
Please do reach out to me. I love connecting with our listeners. Our website is markettaker.com, 2 T's in a row. And, any questions you don't get answered here on the show, I'm happy to answer as well. Join our community. We've got lots of free training on there. It's especially great for the newer folks. And, you're invited. Love to see you.
Head on over there to markettaker.com. Don't forget the second T for Theta. Markettaker.com is the place to go. We got to get on out of here. Hope you pro folks enjoyed your double dose of Options Bootcamp Live, as well as our great pro Q&A session. It's not done today. We're going to come back with Brian a little bit later. He's live to tape. We'll see, listeners. We'll see if I can convince him and his compliance to give you a little bit of a live huddle episode, in which case, stay tuned for your live stream. Maybe a bit of a fun live huddle surprise for you folks out there. So stay tuned for that. Back again tomorrow, of course, This Week in Futures Options and the Option Block Friday volatility views. And then for all you pro folks out there, options oddities after that. Then back again next week with another great Options Bootcamp. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.